I just want to start with the latest news flow we are seeing today, right? The market is really concerned about this AI sell-off that is led by South Korea. And yes, granted, China is weathering it a little bit better, but what is your outlook on Chinese AI?
Well, I think we are still quite optimistic of the whole industry and the growth that are actually starting to take off. So this is not from our perspective, a short-term bubble. We felt like this time around, well, everyone will say this time is different, but we really need to look into the earnings and performance and fundamentals to know if there's a concrete performance and fundamentals that are laying out for this AI and technology upgrade. And we all say that this is a revolutionary forces. So we have seen on the ground, we do believe that the fundamentals are starting to be there already. And our portfolio manager joking about it, well, as the price going up, all the stocks are getting cheaper. So definitely the earnings are showing the signs. So we are still quite optimistic. And we have seen that really the market has been quite volatile, but you have all observed that the whole supply chain are getting very strong.
I just want to challenge that a little bit,
sure.
Because we do see a bit of concentration risk, right? I think last month's data showed that the top 10% of stock is driving 60% of turnover. Is there any sign of pockets of equities looking a little bit overheated?
I think overheating certainly is there. I wouldn't deny it, but every trend turns out to be overheating in the process. And for an active fundamental researcher or portfolio manager, I think our job is to determine this overheating process on just managing the risk along the way. So where do we see actual bubble is overheated, or do we see that we have concrete numbers to back them up? And up till now, we think there definitely will be overheating process going forward. But risk management need to be very cautious where we can determine when is a good time to get out.
So could you be a little bit specific? Where are you looking at, signs? Where are you seeing signs of overheating? You did mention that this is a stock pickers market. It's not
Yes.
a time to invest broadly in index tracking funds.
Well, I think, in the beginning of last year, we definitely have seen great index products to be very rewarding. And this year, I think active equity stock picking really starts to show the color, and we have really good returns. Like in the past 1 year, maybe 100%, 200% return from our active equity. But what we are looking at is the scaling game is still working. So the scaling game for large language model, the scaling game for all the, computing technology is still going forward. And we need to be cautious when that scaling process is slowing down or even stop. And that is the whole, cycle probably coming to a, plateau. And then the whole growth story probably will pivot. And that's when we probably will be very cautious.
I want to ask about the geopolitical risk that we are seeing, because the US have been tightening scrutiny over there. For example, they are barring mainland investors from participating in SpaceX IPOs. And then you have these big tech firms that are being blacklisted. What sort of challenge does that pose to your business?
Well, certainly, I think, barring investments certainly will deny a lot of the accessibility. At the same time, we still is a firm believer of globalization, and we are very strong behind the support of cooperation between two countries, or even, a larger global technology community as a whole. So we are trying to actually launch products, actually to unify the different regions and different supply chains. So last month, we actually launched a product on global AI in Hong Kong. So we are trying really to give people a holistic view instead of just looking at China separately and then looking at US separately. We hope that we still have a holistic perspective and investment tool to actually gather all the supply chain working for our investors.
Yeah, speaking of that, I know that China has some caps, right? We all know China has caps on the QFII sort of capital. And I understand your company is coming up with some innovative products to really bridge that gap and allow investors to tap into international equity. Could you just tell us a little bit more about these new products?
Yeah, thank you. We actually still think that the regulators in mainland China and the regulators in Hong Kong are working closely together actually to provide more accessibility to the market. Actually, just yesterday that the Hong Kong officials in Beijing held the press conference saying that they probably will enlarge the connect in the financial instruments in the Greater Bay Area. And I think that's a great tool that domestic investors can use that to invest in Hong Kong's product, and with that, an extension to international products. And at the same time, companies like ChinaAMC, we are trying also to launch more products internationally and also serve as sub-advisory to different products worldwide. Like we have a product in Brazil, in Thailand, we have 3 products in Canada, and last year we launched the CNQQ products. It's like the Chinese version of, QQQ in NASDAQ. So I think accessibility really matters, and then we as a portfolio manager and fund manager should be proactive.
Yes. When it comes to ETF, which is ChinaAMC's specialty, right? In China, this is still a relatively young industry, and in terms of the product mix, it's not as diverse as, say, in Hong Kong, where you have leveraged single stock ETF, actively managed ETFs. Tell us about some of the innovations you're seeing or you're creating in that space, because I understand you're working with index builders to create more specialized ETFs.
Yeah, we call it active indexing, even though we don't really have active ETFs yet. But our belief as the largest ETF provider is index always the key, is the fundamental, what investors are actually investing. So how do we express our fundamental views through indexing, through how to composite the index, I think is the number one question that we need to answer. So with the market is changing so quickly and the supply chain also is changing very quickly, we try to modify the index to keep up or to even guide the investors to different sectors, to the market. So in China, I think we are never saying that we are a passive investor in ETFs. We are actually very active in creating index and then constantly optimize the index to really keep up with the whole changing of the technology.
And in China, we know that people are compulsive savers.
Yeah.
What are you seeing in terms of retail flows? And are you expecting more of this deposit migration into equity investments, into ETFs?
Yeah, I think this whole deposit migration really starts to going to be the best opportunity for China's asset managers to ever have seen in the next 10 years. So we have this term of deposit migration that because the interest is so low in China, and even though people originally really keep their savings in real estate or in deposits, they start to reaching out. And this year we have definitely seen products like, we say like balanced funds or fixed income enhanced type of funds really start to attract attention from retail investors or deposit savers. At the same time, FOF can also provide like TRFs and low risk type of products really attract more attention from investors. I think migrating to equity or ETF will be a long way to go, but the trend is start to picking up.
So speaking of interest rates, what is your outlook on whether the PBOC will loosen monetary policy further?
Well, we didn't really see much of the window probably to lower interest rate in the near term because with the economy in the first quarter to be quite satisfactory, I think, well, the PBOC and the central government really sending out quite optimistic looks. And our projection for the A-share earning this year will be nearly 10%. So with that, I think, well, the monetary policy will still provide a quite, well, comfortable range, but at the same time, I think the interest rate probably will be like the secondary instruments they will consider.
Yeah, we have been seeing this improvement in earnings this year, right? Especially when it comes to onshore stocks. But what is your outlook on some of these blue chip names that has been lagging behind quite significantly?
I would say it's a good time if we're long-term, asset allocator. So we are actually very actively to push insurance companies or even our social security fund actually to allocate more, especially at this time, to large blue chips as dividend type of driven product. Because at this time, really, they are quite a good bargain already.
Okay, let's expand to the global macro environment because now we have expectations of a Fed rate hike. We have all these geopolitics news coming out of the Middle East, oil prices in focus. What do you think is the most important factor that would be shaping Chinese markets in the second half?
For Chinese market, I think because it's so large, and then definitely we have seen in the past several years, the new economy really is picking up and booming. I think a lot of the investors are more interested in China right now because of the whole trend behind, DeepSeek and then all the innovations coming along. But at the same time, because China's economy is so large, and then we don't really forget the traditional side of the business, right, the traditional economy. So for China, even though the geopolitical tension outside is very volatile, but we have a lot of, domestic, work we need to be done, especially around the domestic consumers' confidence, the spending on consumption, and also how we are going to start to really push back on the job of real estate. So these, I think, are still mingled in our investment minds, and we need to be very active in reacting to the numbers that are coming out on the second quarter.
And we actually just got the inflation data out today and the trade data yesterday as well. And it still shows this bifurcated economy, yes, right? Consumption is still lagging. Yeah. Do you think we should be prepared for still quite a prolonged slump when it comes to the consumption names?
I think the multiples really needs to have time to kick in. So we have a better performing stock market. We have people have better returns on their financial investments. We have a lot of the new economy that are earning better returns. And that will circulate back to the consuming and consumption side. But it really takes time. Like multiples take time to actually
How long do you think?
Well, we had a more optimistic probably, in the fourth quarter. Okay. To see, things are starting to panning out from, the beginning side to be the multiplier into the end. But there are consumer names currently, I think, doing better unexpectedly, and we need to be more focused on new economy at the same time, how that will really influence the consumer side.
What are you seeing in terms of global capital flows now?
Global capital flows, well, we experience a lot of inflows in our products through QFII, and also we are looking at more interested in domestic equity from international investors. But I would say it's still more concentrated on the transactional side from the international investors. So the asset allocation investors are not coming yet as strongly as we probably have expected or have seen in the past. So I would say it's still early in the terms of international money coming into domestic market. But certainly I think people are starting to show more stronger interest.
What do you think it would take to attract more of these global investors to come into the domestic market?
Well, the current story is still the technology upgrade. But I think I also understand that, like what you mentioned today about the traditional side of the economy, and certainly international investors are more concerned with those type of investments. But we do think that we need to show a different side of China. And then that probably is the first step. And we think the economy is a cycle. And then, like the flywheel is already moving, starting from the new economy. And the flywheel, once it started, I think it would just probably amplify a lot of different aspects of the economy.
We have to talk about the latest regulatory crackdown when it comes to outbound investment. I'm just wondering, do you see any direct impact of that on your business?
I would say it's probably a plus for my business, because originally I think people have different ways in investing overseas. And of course, I think currently it's just a regulation. It's not really tightening, but it's more demanding more compliance with the regulations that already were in place. But at the same time, we've seen that people starting to use more QDII product to invest overseas. We've seen that people have more requests from our Greater Bay Area Financial Instruments Connect. We have seen that people start to talk more about the ETF Connect project as well. So I definitely think, once those loopholes were sort of sealed, I think the formal channel will be more open. Yeah, so that's my judgment.
Okay, so might be good for your business.
Yes.
You are one of the first movers when it comes to tokenized assets, especially when it comes to tokenized RMB assets.
Right.
Tell us more about the products that you have and why should investors be looking into these alternative assets?
We at ChinaAMC, we are very proud to be the innovator in this area, and also with the guidance of the Hong Kong MA and also the CSRC. And I think tokenized product is more like our way to put concept into proof. So it's not just how investors should transform their traditional investments into tokenized products. It's our way to build an infrastructure so that once digital assets start to kicking in different areas, different regions, different business scenarios, there will be readiness in the infrastructure for tokenized investments. So that side, I think at this time, we are still exploring. We have already finalized, tokenized money market fund in both RMB and Hong Kong dollars and also US dollars. We also have the first tokenized gold ETF ready. So in that sense, we want to be a bridge between the traditional investment instruments and the tokenized digital assets to link them together.